Good morning, investors. Today is 2nd September, and in today's episode, first we will be doing the market analysis. Then we will be discussing two sectors where some interesting developments are happening, and then we will discuss towards golds and silver rising prices, and towards the end we will be discussing the new relations that are emerging between India, China and Russia. So let's begin today's episode. Yesterday market has given a good rally of 200 points and Nifty closed roughly 0.81% up. Now we all know that market has reacted positively to the GDP news, that is the strong number of 7.8%, an unexpected number which has been reported for the previous quarter. Now in our previous videos we have discussed that this growth is mainly backed by government consumption and the capital expenditure, but still market has reacted positively to this news. However, if we look at the FII DI data for yesterday, FII were again net seller for consecutively 6th day in a row. The rally was majorly sustained by the DIIs. So again, as we discussed in the previous video as well, that FIIs are not concerned with the GDP number, they want earnings, and also the other Asian markets are still cheaper for them. That's why they prefer investing there, and they are not impressed by that number. But the good part is that selling is not that much compared to what it happened in the previous week. As you can see, on 29th it was 8300 crores, on 28th it was 3800 crores, yesterday it was 1400 crores, so it was a mild selling. Now if we look at the index options data, then FII still have a bearish position, short position. You can see the open interest is in negative 2.48 lakh. But if you compare this open interest with 29th August, that was negative 3.5 lakhs. Now it is minus 2.48 lakhs. This means that FIIs have reduced their short position. So instead of being too much bearish, they are now mild bearish on Indian equities. Now yesterday the main rally was led by Nifty Auto. As you can see, we have seen 2.8% increase in Nifty Auto. Earlier also, after the GST reforms, we have seen a breakout in Nifty Auto, and yesterday also the Nifty Auto has given a 2.8% rally. Now the rally in Nifty Auto has been fueled by various factors. Firstly, yesterday various auto companies have released their sales figures during the market hours, and if we see, firstly, if we look at the sales figure of four-wheelers, Maruti Suzuki, Hyundai, Tata Motors, you might see the number is not that much impressive. But if you look into the two-wheeler segment, where we have Hero MotoCorp, TVS Motor, Bajaj Auto, the numbers are actually very good. For Bajaj Auto, you might think the number is minus 12%, but if you include exports, then this growth is 2%. Now, even in the two-wheeler electric segment, Ola Electric and Ather Energy, we have seen the strong number of registration, and it was reflected in their price as well. Now, as we all know, GST reforms are soon going to be announced. I guess 3rd and 4th there is GST Council meeting. By 8th and 11th there will be notifications, and by 22nd full implementation will be done. Now, auto sector will be the major beneficiary of these reforms because auto is currently taxed at 28% GST, and if it comes down to 18%, then there is a significant 10% reduction in the auto prices. Now for this quarter, I believe you might not see good numbers because since the GST reforms were introduced on 15th August, and after GST reforms, people have postponed their auto purchases thinking to buy later when GST cut down, and GST will be implemented by 22nd September. So this quarter numbers might not be good, but in the next quarter we have Diwali, we have GST cuts will be fully implemented, and we will also be having rate cuts as well. So Q3 will be big for the auto sector, and the market has started to bet on the auto sector, and you have seen from the past few trading session, Nifty Auto has been doing really very well. Now even in the auto segment, we have seen the two-wheeler segment is doing much better than your compared to the four-wheeler segment, Tata Motors, Maruti Suzuki, M&M, because we have seen that the person with the lower income or with the lower income group is more sensitive towards the price, and we have seen we know that in two-wheeler segments they cater to lower, middle, urban and rural population, which is more sensitive to the price. So GST cuts, rate cuts plus festivities of Diwali, they will push more demand for two-wheeler segment, although we will see the demand in the four-wheeler as well, but the two-wheeler is expected to do good than the four-wheelers. Now talking from the perspective of valuation also, if I open the valuation for Hero MotoCorp, you look at the PE ratio chart, and if I see for 3 year, Hero MotoCorp is almost trading at a very lower end of the valuation, that is 20.8. Earlier it used to trade around 30. Now it is at a very good valuation to study. If you compare it with the Ather Energy or Ola Electric, since they are startups, you can't see their P ratio. We have to see the price to sales, but still they are trading at a very expensive valuation, and there is some risk. So Hero MotoCorp looks safe pocket. Even if you look at the TVS Motor, if I open the TVS Motor valuation chart, if I look at the PE ratio for 3 years, still it is at a comfortable valuation. If we check for say Bajaj Auto, let me open for Bajaj Auto as well. Bajaj Auto PE ratio, again Bajaj Auto PE ratio is also very comfortable, is also trading at a very comfortable valuation. Its all-time high PE was somewhere around 45, and currently it is trading as at 33. So two-wheeler segment is also trading at a good valuation. There is an expectation of volume growth, so that's why market is betting big towards the Nifty, towards the auto sector. Now one more sector where some interesting developments are happening is Nifty Realty, real estate sectors. Anarock, it is one of the research firm. They have come out with the research, and they have stated that top 10 listed developers have targeted 1.49 lakh crores pre-sales for FY26, and out of their guidance they have already achieved 30% in Q1. Now before looking at individual stock data, you must know that you can't value real estate basis the PE ratio, price to book ratio, EV to EBITDA, or price to sales, because in real estate revenue is recognized when the final sale is done. However, the pre-sale is done say 2 or 3 years back. So with the pre-sale number, market is already able to estimate how much will be the sale in the coming quarters. So pre-sales is a very important number for the real estate sector. Now if we look at firstly DLF, for FY26 they have given a guidance of pre-sales of 22,000 crores, and they have already achieved 52%. If you look at Prestige, they have given 27,000 guidance and 27,000 crore guidance, and they have already achieved 45% of the guidance. Now pre-sales number are very strong, but if we look at the Nifty Realty chart, let me open Nifty Realty. We are seeing a consolidation from a long period of time. This chart is seen as Nifty, so it is a very good time to study reality sector stock. And one more thing, since everyone is talking about the GST rate cuts, reality sector is going to benefit a lot from GST rate cuts, and let me explain you why. The biggest raw material for real estate is cement, as we all know. On cement, there is 28% GST. But the problem with the real estate is that suppose you are buying a cement at 100 rupees and there is 28% GST, 128. But the flats, the homes you are selling, there is no GST on that. So you can't take credit of the GST which you are paying on the cement, because on the real estate flats or completed units, there is no GST. So the GST which you are paying on your inputs, your cements, your construction material, it is being recorded as cost. So when GST rate cut will happen, the cost for real estate companies will come down, and you will see that margin expansion will happen in real estate stocks. Apart from that, we all know that rate cut will make the loan cheaper and will raise the demand for real estate. Apart from that, one more interesting thing that is happening in the real estate stock is that their debt is coming down. That means they are deleveraging. Let me open a few examples. For example, if I open DLF, let me come down. Where is the data? For example, you can see in 2018, 17,491 crore was debt for DLF. In March 2019, 17,222 crore was the debt for DLF. Now, if you look at March 2025, it is come down to 4103 crore, indicating that a good pre-sales is being happening and companies are able to manage their growth without debt. Let me show you another example of loader developers. They're also known as Macrotech. Again, if you look at the number in 2000, just give me a second. Yeah, again you see in 2018, 19, 20, the number was 22,000 crores, 25,000 crore, and that has now come down to 7,094 crores. So Nifty Reality also is like is trading in a consolidation range. We have a strong number of pre-sales. We have GST cuts happening which will improve their margins. Rate cuts have already happened, and the debt is also coming down for various realty players. So it is also a good sector to study now. Now coming to gold and silver, yesterday gold and silver have broken the records. They are now trading at all-time high. Now gold is 4,04,785 on MCX and silver is 1,24,661. Firstly, if we talk about silver, then the reason is very clear. After the GDP news, silver has increased by 3.56%. See, silver is being used as a raw material for various industries. So, and this GDP number was also backed by the industrial production. So, seeing the trend and expecting the industrial production to continue to grow, silver price has been increasing. Now in the case of gold, reasons are little different. First, as we know that rupee is falling, dollar is rising, and rupee has now come closer to somewhere 89. Since India is an importer of gold, and gold is being imported in dollars. So if dollar increases, the value of gold will automatically increase. Another reason for gold price rising is expectation of rate cuts in US. Whenever interest rate cuts happen, then fixed income assets like FDs, bonds, or your debentures, their price falls, and gold then become more attractive asset class than compared to your fixed income assets. Another reason for such high demand and prices for the gold is that people see gold as a safe haven asset during the time of uncertainty, and there is an uncertainty which is going through the world, and now another uncertainty during the regarding the trade relations is being happening in the world, which is the emergence of relations between China, Russia, and India. Now, in the ongoing SCO summit, we have seen Prime Minister Modi shaking hands with Russian President Putin and Chinese leader Xi Jinping. Now, see, in geopolitics, no one is your friend, no one is your enemy, everyone has their own interest. Few time back, we have seen that India was boycotting Chinese goods, we have banned TikTok, we were promoting made in China, we have imposed anti-dumping duty on China. Even China has also not done good to India as well. They have restricted their exports of rare earth metals to India, fertilizer inputs to India. But now, since currently the situation is making them to join hands, this all is done just to tell the Trump that he is not that powerful to tell the nation what they should do, what they should not do, from where we should buy the oil from, with whom we should keep relationship or not. Now this has made Trump angry as well. He has written a big tweet on social media regarding that India has now offered them a 0% tariff. However, there is no fact, there is no figure, there is no source. It is just clear frustration of Trump. So that's it for today. I will meet you in tomorrow with another video.